Always, YouTube. I hope you guys are good. I hope you guys are doing well. Yeah, man, in this video, we're gonna be doing market structure. Remember, in our previous video, we did part one. So this is part two, gents. If you haven't seen part one, go ahead and check part one. These videos are very educational, and then if you get the information and implement it into your trading, it will definitely be a game changer, gents. So if you are not yet subscribed to the channel, consider subscribing, like the video, share, comment, do all that great stuff for the YouTube algorithm. And then yeah, man, without wasting any time, let's get straight to the video. So, agents, as you guys can see from the screen, this is a bearish market. We're just gonna go ahead and explain what's happening. Remember, we had the first video which we explained what is market structure basically. So this is the second video where we're gonna be clarifying everything. And then if you get to understand what we're doing here, if you get to understand the lesson, bro, I'm definitely sure that this will be a game changer into your trading. So I'm going to start off with theory, and then later on, we're going to jump into the charts to give you guys more clarity. But then, as you guys can see from the screen, this is a bullish market structure, multi time frame analysis. So, as you guys can see, the market is pushing to the upside, right? So, this means we are in a bullish market structure, and the black line represent lower time frame, right? I will explain that a bit later. And then the red line represent the higher time frame, right? So with that being said, gents, it means on a bigger time frame, as you guys can see, the market is pushing sort of in a straight line to the upside, and then pushes back, as you guys can see, pushes up sort of in a straight line, and then comes back up. So we use bigger time frames. This is maybe your H4 time frame or even your daily time frame, doesn't matter. But then we use that time frames to understand the overall movement of the market, right? So in this case, as you guys can see, the overall movement of the market, it's a bullish trend because the market is pushing to the upside. So obviously we have smaller time frames, right? Like your H1, like your 15 minutes time frame. Those are the time frames that we use for our entries, right? So as you guys can see, the red one, we push into the upside, we took out the high. So after taking out this high, we understand that the market is in an uptrend. The market pushes back to the downside. And then after that, those are the areas that we're looking to enter the market, to push with the market to the upside, because we understand from a bigger time frame that the market is in an uptrend because we keep taking out highs, right? So now, with that being said, we use our smaller time frame to enter the market, right? We're not gonna use, let's say the market pushes down till here, we're not gonna use bigger time frame to enter. Why? Because of the stop loss might be very big, or we on smaller time frame we need to see our confirmations so that we can enter this market. Obviously, with our strategy, remember, we're using patterns to enter the market, and then also using order blocks. I will get to that topic later on. I'll most probably do a video on that. So in this video, I just want to introduce you guys properly into the market structure, because you need to understand the market structure. Remember, either you're trading Falcon, either you're trading smart money concept, either you're trading trend lines, Fibonacci's, or whatever that you're going to be trading, you need to understand market structure, right? So that's the reason why I'm doing this video for you guys, right? So now, as you guys can see, the red line represent an uptrend. The market is being pushing to the upside, taking out highs. So we understand that the market is in an uptrend. And then now, let's say we are looking at this on a bigger time frame, right? We will only see this straight line to the upside, right? Let me just try to remove this, something like so. Let me just try to put it up there so that you guys can see, right? So as you guys can see, this is a bigger time frame, right, that we're looking at now on the red the red line that we're using here. It's a bigger time frame. You will see the market pushing to the upside like so, and then you will see sort of straight line pushing to the upside and then pushing back, pushing to the upside, right? And then let's say you move to a smaller time frame, you'll see something like this, the market pushing to the upside, pushes down, pushing to the upside, pushing down, pushing to the upside, pushing down. Doesn't move like straight like so, right? But then on a bigger time frame, we will see something like that, right? So now with that being said, we know that okay, the market is in an uptrend. Even in this piece of price action, we can understand that we're taking out highs. As you guys can see, we're taking out highs, but then we're not. The market does not break the lows. As you guys can see, the lows are still there, right? So now, after identifying that, knowing that the market, even on smaller time frame, is pushing to the upside, we're looking for buying opportunities. Obviously, let's say the market breaks structure here, pushes back. Let's say there's an order block or an entry criteria that we can use, then we're gonna be looking to buy there all the way to the upside, right? But obviously, the market moves in zigzag. So let's say the market, we broke structure here, for example. Let's say we broke this structure with this extension, right? And then the market is pushing back for an order block somewhere around here. I'm talking about the bigger time frame, right? We will see the market pushing, and then as you guys can see, the market here, it pushed to the upside. Here it turns bearish. Here it turns bearish on smaller time frame, right? I want you guys to understand that this was the last low, as you guys can see, right? This was the last low that the market printed. And then as you guys can see, the low was taken out, right? So we can say this piece of price action here, it's a bearish movement because the market is pushing to the downside. It is creating series of lower lows and lower highs, right? Lower lows and lower highs. So in this example, we're having a bearish market, right? When the market is pulling back to an order block on a bigger time frame. On smaller time frame, we will see something like this. We will see a bearish market because the last low that was printed in the market is taken out. Then we can see the market pushing to the downside. Obviously, this is where counter trending comes in, right? This is where we can counter trend. Counter trend means trading against the trend. The overall movement, the overall trend is an uptrend. But then if we are counter trending, then we are trading against the trend because the overall trend is going to the upside, and then we are trading to the downside. Maybe because we have identified an area of value where the market will most probably start turning from, right? So that's how we do it. But then we're not looking to counter trend that much. Yes, we can counter trend, especially if we are familiar with the markets. We can definitely counter trends. There's nothing wrong with that, and then you can still make money counter trending. But then obviously we are looking for the big movements, right? Obviously, when the market is pulling back, let's say we broke structure, the market is pulling back for an order block. Obviously, we don't expect the market to give us big movements. But then when we expect big movements, when the market it's pushing with the trend, as you guys can see here, the market, if you can check here, if you can just measure this from there till here, right, you understand that the market it's pushing to the downside, but then with it does not give us those big movements. But then if you can check from here to the upside, let me just grab that to the upside, you can see the difference. The move it's longer than the bullish move is longer than the bearish move. So this is why we don't like counter trending, because we know it's not for a long term, right? We know that counter trending is it's risky because the market can decide to turn here and start pushing to the upside and take you out, right? But then we do counter trend at times. It needs practice, right? As much as you get to understand some of the things, then even counter trending, you will definitely understand that. But then as you guys can see, for the market to start, let's say now, I just want to give you this example, right? So let me just take this back, right? We understand that the red line, it's a bigger time frame, and then the black line, it's a smaller time frame, right? So now let's say now the market is pushing to the upside. We broke structure, the market is pushing to the downside. uh we're talking about pure smart money concept, right? How are we gonna enter our trade? Obviously, with our strategy, we usually enter early. Why? Because we're using patterns. Let's say we have an order block somewhere around those areas, right? We're gonna say, okay, this is our first touch, second touch, and then we're gonna enter on the third touch because it's in correlation with the order block. We're only gonna enter if it's in correlation with the order block, and then the pattern is very clean. So as you guys can see in this example, we're having this nice pattern, very clean pattern. This being our first touch, second touch, third touch. Sometimes we do get fourth touches, sometimes we only get third touches, but then we understand that it must be in correlation with the order block. I'm gonna do a video on order blocks as well so that you guys can understand, and then I'm gonna do a full video analyzing again so that you guys can be in the same page, right? So now we use this kind of patterns to take advantage of the market because most of the time they are in correlation with other blocks, right? And then that's where we enter. But then using pure Falcon, I mean pure smart money, I'm sorry, using pure smart money, gents, we're gonna be looking for change of characters. Remember, we had a discussion about change of characters in our previous video. Feel free to go back, and if you missed something, feel free to go back to that video, and then so that you can understand what are change of characters. Okay, for example, change of character, we're just gonna focus. Let me just take this out of the way for now, right? I just want to take this out of the way since we understand what's happening. We had a discussion about this in our first video, so let me just take it away for now. So let's say now we are on a smaller time frame, and then let's say now we see something like this. We understand that the market is in a bullish time frame, and then the market pushes back, it pushes higher. On a bigger time frame, it breaks structure. We understand that the market has to come back because we have an order block, and then the market to still to continue to the upside, right? So with us understanding that, let's say we the market printed this price action here, right? So let's say this piece of price action does not exist for now. Let me just do this, right? For now, this piece that I've highlighted with the gray triangle does not exist for now, right? Does not exist, right? So we understand that the market broke structure on a bigger time frame, and then it has to come back down, right? So let's say now the market is pushing to the downside. It has mitigated our order block, for example. I will talk about order blocks. So after mitigating our order block, we know that we're getting ready for our buying opportunities. So for us to buy, what are we going to wait for? We're going to wait for change of character. Why am I saying that? Remember, just this piece of price action here, this one here, it's a bearish time frame. It's a bearish movement because the market took out the last low, and then as you guys can see, it keeps taking out lows. So this is a downtrend. This piece of price action here, it's a downtrend. But then we understand that, okay, our order block, we knew that price has to push back till maybe this area here, and then now price got to that area, right? So we know that, okay, the bullish market might come into action, right? So now, with that being said, obviously we have highs here. We have highs. So we're just gonna wait for what? For the market to take out the high. Because we know when should the market take out the high, we know there's a very high chance that the market will change in character. You need to understand that, right? So now let's say that the high is taken, as you guys can see, we're just gonna be looking to take our trades from those areas. Why? Because we will be having an order block, and then we are sure that the market will most probably start pushing to the upside. So our interest will be here all the way to the upside. Obviously, this will be our first take profit, and then we'll take profits accordingly, right? So now, so that's what it means by multi-time frame analysis. You need to understand what's happening in a bigger time frame, and then obviously you also need to understand what's happening in a smaller time frame, right? So let's say now the market played out accordingly, broke structure again on a bigger time frame. We broke structure again. The market is in a bearish, in a bullish. I'm sorry, it's in a bullish. It's in a bullish market structure, right? It's pushing to the upside. If you can check, even on our smaller time frame, we keep taking out highs. As you guys can see, this is a bullish market because we keep taking out highs, right? But then our lows are still there. Our lows are still there, are not taken out, as you guys can see. This low, this low was it was printed before this low, and then as you guys can see, this low is above the previous low, right? This low was printed before this low, and then this low, it's above the previous low. So this is how we identify an uptrend, right? So now we know, okay, we took out the highs. We know that the market has to come down for an order block. Let's say we have an order block down here. We know that the market has push down to that order block. So now we're gonna experience what? Change of character. And then as you guys can see, the market is printing lows, right? So now the order block is mitigated. What are we gonna wait for? We're gonna wait for the previous high that was printed to be taken out. As you guys can see, this price action here was a bearish price action, right? So let's say now that the previous high that was printed, the last previous high, after mitigating the order block, the last previous high was taken out. As you guys can see, the market took it out. So this is where we will consider this as a change of character, right? Because this was a bearish structure, right? So now obviously we know the overall structure, it's a bullish on a bigger time frame. We know the overall it's bullish, right? So now after taking out that, we're gonna look forward for our order blocks, right? So this is that we're having an order block here, and then the market came back to that order block. This is where we're gonna be looking to enter. Obviously, our stop losses below the order blocks, and then obviously our first target will be the previous high, and then we know that the market has a very high chance of pushing to the upside chance. So this is the bullish multi-time frame analysis, and then now we're gonna do the bearish. Then after that, we're gonna do a little bit of explanation, and then we're gonna jump straight to the charts. So let's do the bearish. So gents, we're gonna go ahead and look at the bearish market. Nothing changes, same concept. But then the only difference is that now the market is pushing to the downside. It's a bearish market, it's a bearish trend. But then the concept still the same. So I'm not gonna waste a lot of time explaining. But then as you guys can see, the black represent lower time frame, and then the red represent higher time frame. Lower low, LL represent lower low, LI represent lower high, right? So as you guys already know that on a bearish market, the highs has to remain, right? As you guys can see, the lower highs are not taken out. This is the previous lower high, and then the recent one does not take out the previous one. As you guys can see, even here, this is the recent one, and then it does not take the recent one does not take out the last one that we had, right? So it shows that the market is pushing to the downside. But then on the other side, as you guys can see, the lows are taken out, right? The lows are broken, the lows are taken out. So that's when we can say now this is the market is pushing to the downside, right? So now, as you guys can see, we have external structure and internal structure. And then external structure, we get it from a bigger time frame, and then internal structure is we get it from smaller time frame. This is the structure that we're gonna be looking to that will help us to take trades from, right? So now as you guys can see, the market is bearish. The bigger time frame, you can see the line is straight, and then it pulls back, it pushes back to the downside, takes out the previous low, pushes back in. As you guys can see, the structure is not clear. Like we don't have those like in the internal structure. In our internal structure, we can see that okay, internally the market still breaks lows. As you guys can see, we took out this low, we took out this low, and then now when the market pulls back, obviously there will be structure again, right? Change character, break structure. So obviously on smaller time frame, we're having how can I put it? We're having two trends on smaller time frame. We understand that, okay, the overall movement is to the downside, but then we still have those uh uptrends, as you guys can see. Even if you can check here, we have this market pushing to the upside, producing series of higher highs and higher lows. Even here you can see that the market is pushing to the upside, producing series of higher highs and higher lows. Even here, as you guys can see, the market still produce series of higher highs and higher lows. But then on our external structure, we don't see the market doing that. We don't see the market giving us those on a bearish market. We don't see the market giving us those higher highs and higher lows, higher highs and higher lows. We only see the market pushing to the downside, giving us lower lows and lower highs, lower lows and lower highs on a bigger time frame, right? But then on a smaller time frame, the market changes to be positive. I mean, to be on an uptrend. Again, it changes to be on a downtrend. But then obviously we are in a downtrend. We will understand that the movements that are pushing to the downside, they will take long time. They will be longer than the movements that are going to the upside. That's what you need to understand, because when the market pushes, we are in a downtrend, remember. When the market pushes to the upside, that is just a correction. We call it a correction. We call it a reversal to an order block, so that we can have another trend to the downside. So as you guys can see, the market pushed to the downside, created a lower low, went back up, created a lower high, and then started pushing to the downside, broke the previous lower low to show that we are still in a downtrend, came back inside, and then obviously we use order blocks. Obviously, maybe let's say we have an order block somewhere around those areas there. We can enter early using patterns, but then otherwise we can wait for the market internally to change structure, to change character. As you guys can see, this was a high, this was a high, and then this was the last low that was printed. Looking at this price action before the market mitigated the order block, right? We're gonna talk about order blocks on our next video. But then as you guys can see, the low here was taken out. This was the previous low that it was printed. So it was taken out, and then after mitigating the order block, we understand that now the market has to change in character to what? I'm talking about internal market structure, to what? To start pushing back to the direction, right? So now we change character here, and then what happened? Price pulled back to the order block. So this is exactly where we're gonna be looking for our entries, right? This is exactly where we're gonna, after taking this low here, right, that one there. Let me just change colors so that I do not confuse you guys. Just gonna use blue, right? And then let's say we have an order block somewhere around those areas there. This is exactly where we're gonna be looking to enter ourselves to push with price to the downside, right? So this is the relationship between the internal structure and the external structure, right? The internal structure will help us to take our trades, right? It will help us to identify that now the market is ready to push with the trend, and then that's where we want to be involved, right? So as you guys can see, we took out the last lower low on our external structure, right? And then the market is pushing back, as you guys can see that. And then what happens? Maybe let's say we had an order block somewhere at those areas there. We're gonna wait for what? For the market internal market structure, which is the black one. Obviously we were pushing, it was giving us series of highs, right? It was giving us series of highs and lows, right? So the last low that was printed, which is this one here, it was taken out, as you guys can see that, with this impulse. And then now we identify our areas, right? Which maybe let's say we have an order block here. We're just gonna wait for the market to pull back to that area, and then we're gonna be looking to enter from there. Obviously our stop loss will be above, and then that's where we're gonna move with the trend to the downside. So this is basically how we use market structure to our advantage, because remember, gents, market structure gives us a lot of information. It gives us everything that we need to know in the market, right? So that's why it is very important to understand market structure. I assure you, gents, if you get to understand market structure, it will be a game changer in your trading. It will definitely be a game changer in your trading, because you will know when to enter the market, you will know when to exit the market, and then you will know when the overall trend of the market is changing. I will also jump into that after this, because obviously this was pushing to the downside. So let's say now let me just explain it here, right? So let's say now the market on a bigger time frame. Let me just grab this, right? On a bigger time frame, the market start pushing to the upside, takes out the previous high that we had, which the previous high that we had, which is this one. We will consider this as a change of character because now we took out the previous high. So we will expect the market to pull back. Maybe let's say we have an order block here to pull back to that area, and then we're gonna start looking for buying opportunities. Why? Because the market changed in character. The character of the market was pushing to the downside, but then because it took out the last high that we had in the market, we consider that as a change of character. It means now the market can start pushing to the upside, can start giving us those series of low or of higher highs and higher lows, as you guys can see from this example, right? So it means now we can start looking for those opportunities to the upside. So this is basically it. If you get to understand this, gents, it will change everything, right? It will change how you see the market, and then it will help you a lot in understanding when to enter, when not to enter, right? So I was talking about this, right? So let's say now we have this as a change of character. I just want to identify that. So the reason why this is a change of character is because the previous high that we had in the market was compromised. It was taken out, right? So after that, we expect the market to start changing in character, to start pushing to the opposite direction, which is an uptrend now, right? And then as you guys can see, the market started pushing to the upside. So we're gonna go ahead and do this in the charts so that you guys can also understand. So I just want to talk about change of character real quickly, and then after that we're gonna jump straight to the charts. So just let's talk about change of character, right? Change of character is part of market structure because you need to know when the market is changing in character. Meaning, let's say the market was pushing to the upside, now the market is changing to be a downtrend. You need to understand that what happens, um, and then how to take advantage of that as well, right? So in this example, as you guys can see, just gonna start with this piece of price action here. Let's start with this piece of price action here. As you guys can see, we're taking out highs. So it means the market is in an uptrend. Those are lows that were printed. And then notice how price changes. Notice how price takes out the previous low that the market printed, which is this one. This is where we consider this market changing in character, right? Because we know that, okay, the last low that we had in the market is now being taken out. So we can expect the market to start pushing to the downside. So this is what it means, right? So now, as you guys can see, the market started pushing to the downside, right? So as it pushes to the downside, obviously it creates series of lower lows and lower highs, right? So those are lower highs. So notice how this is the last low that was printed, and then the market took out the last low. So we consider this as change of character. This is what we mean by change of character. So as you guys can see, the market pulled back to an order block and started pushing to the upside. So this is what I usually advise people, right? For us to be sure that the market change in character. Yes, we know that the market change in character because we took out the previous high, right? The market started pushing to the upside. Most of the time we prefer to wait, right? We prefer to wait for the market. Most of the time we prefer to wait for the market to break the new formed high, which is this one here. We prefer that, and then that's when we're gonna look for those nice order blocks. Just for safety reasons, it's not wrong to enter here, right? But then just for safety reason, we prefer the market to take out the new formed high so that we can say now we are in a very clean uptrend, right? And then as you guys can see, price came back for that OB. This is exactly where we're gonna be looking to enter the market to the upside, right? So this is basically how we use change of character in our advantage. And then so that we can take advantage of the market, gents. So yeah, let's jump straight to the charts and then show you guys a few examples, and then we're gonna wrap up. So yeah, gents, let's make an example in an actual chart. I'm looking at Nasdaq. This is H4 time frame. I want you guys to notice how the market is moving, right? So obviously this is a market cycle. As you guys can see, this is an uptrend, and then we also have a downtrend. So this is a very good example, right? Because we have both an uptrend and a downtrend. So I just want you guys to understand. Obviously, the market is from the down side, and then we, as you guys can see, printed a high, right? And then now we started pushing to the upside. This high was not taken out, so this we printed a new high, which is this one up here. Then we printed a new low, as you guys can see. Price pushed to the upside. We took out the previous high to show that we are still in an uptrend. We keep taking out highs, right? So after taking the high, price came down. We could not take the previous low is still there. It was not taken out, so it shows that we are still in an uptrend, right? So we took out the new high, right? And then printed a new high, came back down, as you guys can see, printed a new low. The new low, it's above the previous low, showing that the market is still in an uptrend, right? So as you guys can see, we took out the high, right? We printed a new high, right? As you guys can see, the previous low, which is this one here, it was taken out, right? It was taken out by this new formulated lower low, right? Price went high, created a new high, which is this one here, started pushing to the downside, took out the new lower low that was printed. So now obviously the market was in an uptrend. After taking out the previous low, which is this one here, the market started pushing to the downside. We started experiencing change of character, right? Because the last low that was printed in the market, it was taken out, right? So as you guys can see, price came back, found an order block here, but then it did not take um, the previous higher low that was printed. So this is still in an uptrend. We came down, printed a new high, which is this one here, and then we had this order block here. Price came back for that order block, as you guys can see, right? Printed a new low. This low that was printed, this lower high that was printed, it is above the new printed low. So this is still in an uptrend. And then as you guys can see, we broke structure, and then we currently pulling back to that, right? So we identified our area of interest, and then price is currently pulling back to that. So let me just take this back just to show you. This is just a bigger time frame, analysis, right? Bigger time frame market structure. As you guys can see, this is how it moves, right? And then now going to a smaller time frame, if you can go to, even if maybe let's say we push back to H4, okay, I mean H1 time frame. I just want to show you guys what I was telling you about, right? So now we're just gonna go ahead and identify our internal structure, right? I just want to go ahead and start from a bigger time frame, right? Just gonna go ahead, start from a bigger time frame. Okay, just want to take this back. Just want to take this back. Okay, I'm sorry about that. I'm having a very slow network currently. But then, yeah. Okay, let me just do this. Right? So I just want to go back to that. I just want to go back to that uptrend before looking at the downtrend, right? So obviously, okay, let's just take price back quickly. Take price back. I want you to notice that we also have internal structures, right? We also have internal structures, right? So, okay, it doesn't want to go further than that because I don't have a plan. So we're just going to focus on the downtrend, right? I want you guys to notice how the market is pushing to the downside. Uh, so as you guys can see, we have internal structure now, series of lower lows and lower highs. We have internal structure now, right? As you guys can see, right? We have internal structure. This was the last low that was printed. It was taken out, right, by this one, and then now we having a bullish market, right? I want you guys to notice that This was the last low that was printed, and then what happened? It was taken out here. Price came back for an order block here. It started pushing to the downside, right? So those are the things that you need to understand. Once you get to understand that, then man, you are gone. You are gone forever. No one will ever stop you. You understand? So now the market now change character here. As you guys can see, this was okay. We broke structure to the downside. This was the last high that the market printed. We changed character. The market came back, found an order block here, and then what? Started moving to the upside. Internal structure, right? Started moving to the upside, series of higher highs and higher lows, higher highs and higher lows, right? So that's pretty much it, right? That's pretty much it. This was the last low that was printed, right? Came back, changed character, started pushing to the downside. Series of lower lows and lower highs. So this is internal structure. And then the first one that we drew, it was an external structure. So that's pretty much it. I'm sorry about that, gents. I had to cut the video short, but then yeah, let's continue. So as you guys can see, as I was saying, right, from bigger time frame, we can identify that okay, the market is pushing to the downside, and then when we move on to a smaller time frame, we will be able to notice that internal structure, right? So as you guys can see, price was pushing to the downside here. I marked it with red, as you guys can see. Then we change character, we push to the upside a little bit, then again, this was our last low here. As you guys can see, let me just try to mark it for you. Let me just try to grab that for you. As you guys can see, this was the last low, right? Then it was taken out. Obviously, there's an order block somewhere around those areas there. Price came back for that OB. Then obviously the market is pushing to the downside. We're gonna be looking for those selling opportunities, right? Then we broke structure again here. There is an order block around those areas there. Price came back for that order block, which is our second entry. Could have moved to price with price to the downside from there again, right? And then now, as you guys can see, this was the last high that was printed. This one here, right? And then as you guys can see, the market took it out, came back. We had an order block around those areas, came back for that order block, started pushing to the upside, giving us those series of higher highs and higher lows, as you guys can see, right? Then this was the last low that the market printed. It was taken out and the market started pushing to the downside from there, right? So this is pretty much it. If you get to understand this and then you implement this into your trading, bro, just market structure alone, you will understand that the market moves in phases. The market pushes to the downside, the market pushes to the upside. You will know exactly that okay, the market now is pushing to the downside. It means I'm looking for selling opportunities. Even on smaller time frame, the market is pushing to the downside, and then I'm looking for those order blocks, and then I'm looking for those imbalances, and then that's when I'm gonna be looking for those opportunities to the downside. Once you understand this, it will definitely be a game changer in your trading, and then it will be much easier for you to trade the market. So yeah, gents, our next video will be on order blocks. I think it will be important as well, so that you guys can understand order blocks. What are we looking for? Why are we taking our trades from order blocks? What actually an order block is, right? So our next video will be on that. So this is a wrap. We came to the end of our video. I really hope you guys took a lot of value out of this one. So yeah, gents, thank you so much for watching. I really hope you guys took a lot of value out of this video. Our next video will be on order blocks. Don't forget to watch part 1 of this video so that you can get all the information. Don't forget to subscribe to the channel, like the video, share, comment, do all that great stuff, gents, for the YouTube algorithm. Let's help this channel to grow, gents. But other than that, gents, thank you so much for watching. I will see you in the next video. Always, gents.